Holy moly. Um, wh- what's up, fam? I can't believe it. I can't believe it. Look at you guys. Yes, we were ready. I appreciate you guys. Look at this guy ready to roll for president. I wish. Can you guys hear me okay? Audio check. Look, Ava's in the house. Spider, best traders in the world. Good vibes for sure. Man, I mean, man, oh man, what a morning. Holy crap. Yeehaw is right. I just like, this is, yeah, Hood, by the way, was like the first thing on the shopping list today for your boy. I think, I mean, look, I don't think that Chico, what's up? Mike is good. Appreciate you guys. Look, I posted this morning on my X feed. Let me see if I can pull this. Oh, here. This might look weird if this pops up as a stream soon. I think it's like three things. Here's what I think, right? Let me just take this. Let's just take this down for a minute. But I think, first of all, the VIX opened up this morning at 50. And then it went to like 60 something. And I'm like, what? I'm like, this is crazy. I've not been in the recession camp at all this entire time. Quite frankly, I kind of think that we've probably been in a little bit of a moderate recession, but the market didn't really realize it. And now we're just kind of in correction territory. I think there's three things that we should look at. First of all, do I think this is a buy the dip? I think some things are a buy the dip for sure. I definitely think that we get this bounce. I mean, obviously we get a nice bounce, but the question is really like, is that it, right? And I don't know just yet. So yeah, this was crazy, right? 65, the VIX at 65 without a war or a pandemic. No, that just like, no. I don't see that happening. That was wild. And if you don't know, go to the like YouTube channel. If you're watching on X or anything like that, you can go to our YouTube channel and there's this video that I posted like a year or two ago about like why the VIX isn't really a good gauge anymore, and what specifically it looks at. But I think that said, there were a lot of hedges. There were a lot of hedges already on. And I know Sharky, who's probably, I think he's got family coming into town right now, so he probably won't be joining us today. But look, I don't know. That was crazy. But I think there's three things, right? So number one, the yen carry trade. I actually think that that's probably, to me, the prime culprit. Got bit by a spider. Appreciate you guys. I think the unwinding of this yen carry trade was the prime culprit. And if you don't know what that is, I mean, think about it this way. If the yen had like negative interest rates for a really long time, which it did, or near zero, can you borrow the yen for free and then go buy whatever asset you want? I mean, that's been going on for a while. And I think that now, well, not I think, now with that coming back, meaning like you can't really, they're raising rates. And I think that's going to unwind. A lot of people are going to have to like, basically, I don't know how to explain it. Kind of like, here's my loan back, right? And they have to sell what they had. And I think that's a lot to do with what we have in the market, specifically also crypto. But I think that really kind of like was gasoline to potential fire already. Seasonality, yes. I think the unwinding of the yield curve, they keep talking about 210 yield, 210 spread. If you don't know what that is, the 2-year and the 10-year, when that started to unwind, that to me was like, okay, yield or rate cuts, and this goes to the rate cut camp. Rate cuts are not the actual rate cut. We've always said is going to be a sell the news event. And, even when Powell was talking things like that during the FOMC meetings, it's kind of like we talked about how, he's kind of like edging. How close to the edge can he get without actually doing it? I think he's done the best he can. But in terms of forecasting, like, look, the Fed is a absolute shit show when it comes to forecasting. We don't really know. They don't really know. That's if we took them at their word, like, or they've done a pretty piss poor job in forecasting. We need some stats. We need some stats on how much of the yen carry trade has been liquidated. That's a good question. I think Kevin, KG Bull and Bear might have that. If we have a rate cut next month, how will market respond? So this is where I'm at. I think that, like, if I have this weird feeling, when we get the actual rate cut, I feel like it's still a sell the news event. And that's why I'm like, I'm a little hesitant. A lot of things hit my targets or very close to from a downside perspective. You guys know that we basically called the top. And more or less been net short, specifically for our trades and things. Today, it's like, look, I got to cover all of that, and we're probably going to bounce. Cover meaning, like, I don't want to be net short here, not net short, but I'm still concerned. Like, do we buy this dip just yet? I feel like you can start to nibble, but I think you got to be really prepared. What's up, May May? So that's what I would say. I would say, if we do get a rate cut, first of all, it's not July. So July, it's September. So the next meeting is not until September. And that's where it gets funky. If we get a rate cut next month, that's technically going to have to be an emergency Fed cut. So that's where it's like, this morning, the Fed funds were pricing in like a probability of an actual emergency cut, which I'm like, whoa. Not this early. No way. If the Fed did an emergency rate cut now, like this week, they would lose like all credibility. So I don't really see that happening. Am I in UVXY? I actually bought some puts on UVXY. The VVX, they're probably crazy expensive. I think I would defer to like a SVIX equity right now because volatility is so high. So these are the two things. And then also, on top of all this, we've had, these crazy attacks in the Middle East still. So between the unwinding of the yen carry trade, the 210 curve re-inverting, right? So the uninversion of, so the if you guys were around, like when the 2-year was higher than the 10-year, I was like, oh, this is the craziest, the most reliable short signal ever. It's like, wrong answer. That's not true. What is true is that it's when the 2 and the 10-year curve uninverts, you get this type of pullback. But it's typically it's a temporary type of pullback. It can be a temporary type pullback. So it's tough. It's really tough right now. Hopefully we chop for a while. What I don't want to see. And so if you're a trader out there, and if we just do a straight shot to the upside all the way back to all-time highs from here, I don't think that that's going to be the best thing to see. I think that would not be super healthy. I'll just put that out there. What we want to see is some stabilization here. So, yes, a big bounce today, albeit still pretty low from where we were. IWM hit my 190. I was looking for 194s. So it hit like just under that 200. I did buy some more leaps today. Man, I had the perfect hedge too. I had the absolute perfect hedge on IWM. I'm like, oh my goodness. I don't, with the VIX this high or with volatility across the board, it's not even about the VIX. It's not about the VIX. When the underlying that you're looking at has moved this much, specifically over the weekend, I mean, vol across the board is just epically high. And so a lot of people might be inclined to just like go hammer leaps. I think you can buy some because we did go so low, but you know, if we revert to the mean, just know that the underlying of that equity, the volatility is going to come down and your leaps might be a little bit underwater, even if you get the direction right. So just be a little careful. But that said, you know, when the VIX is this high, it's not typical that we see this huge like V recovery. So there's some things like, you guys know I bought this NYCB and I believe it or not, the thing is not down. The thing is not down. So when I look around, and that's the most interesting. And so the hedge on, I did that, man. Okay, I am David and I are the same. I had the perfect hedge. I mean, this was the perfect hedge. We have the leaps, IWM leaps. I bought, I was 816, 212 puts as a hedge. And I did the exact same thing. I'm like, okay, if he was going to say something, it would have happened. We're going up. Let's ride. And I closed it. And oh my God. Oh my God, did it. I mean, it would have, I'm in shock. Because they would have covered everything, and I mean everything. So yeah, and this is what I'm looking at, right? So yeah, NYCB doing well today. I think that's interesting, right? Like super interesting. It didn't even get hit really this morning. If you didn't notice, it opened up higher than Friday's low, as an aside. So there are some things that are not really getting hit. You guys may or may not know I'm long some other things. My recent purchases, let me see. So McDonald's recent purchase, fine, right? 3M recent options entry, decent. Chipotle CMG, fine. Like there are some things, and just if you're thinking about like what to do here, those are not high growth names that I'm buying. Those are value items that I think were on sale at the time. I think that continues, albeit some of those might be pulling back. Like look at UNH this morning. We had entered a swing long on United Healthcare. But when you look at it this morning, it's like, oh, it looked good, but I kind of knew like, hey, look, this isn't going to hold, because what's going to happen is we'll start to see some of that unwind. So NYCB doing good. I think IWM is good. I hope it's good, but for an options trader, we need to let this volatility chillax, right? You guys know me. I'm always like, hey, we want to enter at the close. By the close of the day, even if the price is a little bit higher, that's fine. Look, anything can happen between now and the end of the day. That's what's true, right? If experience tells me anything, don't believe what you see this morning. It can look really good, but by the time this market closes, we could be back at the lows. I don't know, right? So just make sure, please make sure that, you're most importantly sized appropriately. I think size is the biggest thing. IWM pups. Yeah. Man. Yeah. It did. The puts were just like, they would have covered everything. AMD, I actually came in short AMD over the weekend. I think, AMD at 133 was a big level. Looks like it's reclaiming. I'm not ready to go long AMD, guys. Not me. You can. But yeah, I can see it. She's back over Friday highs. That's a wild recovery. That's a wild one. Earnings are behind her, but like, I don't know. I mean, I just look at it and I'm like, okay, Nvidia down 95 this morning. They haven't reported yet. You still have SMCI, you got Dell, the whole cohort still. Would I rather AMD or would I rather Nvidia? I would rather Nvidia, but I have a level on Nvidia like 80. So I think 95 is like that first area. Did we get to 90? Oh my God. Well, I guess I can't be too much of a stickler. We basically hit the 200-day simple moving average on NVIDIA. Really close. Really close. Oh, yeah, this is what you're talking about. Yeah. Oh, you got a one entry? That's money. That's a good one. Yeah, we came in short AMD over the weekend. And I had Apple puts also. A lot of this stuff just completely recovered. So where is the reshort? I love Oscar's not even asking, is it a little long? Is it a long? No. Where's the reshort? I think you have to give it a minute, right? So like I had like 238. I had 238, Oscar. So we'll see. Give her a bit. CrowdStrike this morning comes out with their first kind of like rebuttal against the Delta thing. Yes, Delta did mention 500 billion in damages. No, Delta cannot actually come at them for $500 billion. But that's only one airline, by the way. That's only one airline. So there are many airlines that were affected, and they're probably going to be multiple cases. So I don't know. CrowdStrike, yeah, Oscar's probably in the right camp. Look, that's going to be a long and drawn out recovery. We'll see. I can't see the chart screen. I'm not on the chart screen just yet. I'm actually just holding this. So let's, you know what? Let me do this. Let's go back to this. This is where we actually were. So anyways, VOLMAGEDDON, you guys. The VIX at whatever it was this morning, 65. I don't think that deserved to be there. Look, we're already down 50%. So VIX now 31. VIX now 31. UVXY 50. Let me see what my puts are doing. And oh my God, everybody's brokerages this morning. Pff, what a shit show. I was pissed. Were you pissed? I was pissed. I could not. No, they're fine. I couldn't open my Schwab account, my TOS for, I don't know, like an hour. I'm like, whatever. This is crazy. This is crazy. So anyways, yes, welcome to VOLMAGEDDON. It is here. Believe it. It's probably here to stay, but not at 65, guys. Not at 65. Come on. Not at 65. 20, maybe. But no, that's too much. And I even tried to sell some upside credit spreads on this thing, on the VIX. Oh my God. The spreads were just absolutely like stupid. So good luck with that. They're not giving it to you very well at all. So anyways, by the way, if you're new, we got a lot of people in the house. So appreciate all you guys. Ready to roll. I think you could trade upside. I just don't know that you want to be like heavily. This is not the time or the place to be overly leveraged. Let's just say that. Anything can happen. Just be aware. You got to be on your toes. It's not exactly swing trade central. Not here. So anyways, here's what happened last week. Let's get to it. Jolts came in. Jolts, remember, so Powell's been talking about the labor market. That's what we're talking about. That's what we're watching. In parentheses, that's what the market was pricing in. 8 million coming in at job open 8.18 versus 8.23 prior, lower. That's worse. ADP historically like way off of non-farm payrolls, but now here's the thing. Now non-farm payrolls, the BLS does the non-farm payroll numbers. The BLS has been absolutely horrible. I mean, like just like whoever, like this system on the non-farm payrolls things, I feel like is losing credibility, like insanely fast. Yeah, Tessie doing. Yeah, I think a lot of this was overdone, right? So we could bounce, but if we go too far, too fast, I think you cut, and then you look for a higher low. That's what I'm talking about. So ISM manufacturing, this was probably a bit bloodier than expected. This is, manufacturing PMI. Market was pricing in 48.8. We came in actually 46.8. That's really bad. Probably one of the worst readings that we've had on a 51.6 prior. That was a bit of a death blow for sure. Non-farm payrolls. This was the one that just like, okay, she done did it. And this is where I'm like, oh, what's up, Evan? Evan's in the house. This is the one. Non-farm payrolls coming in at 114 against a 175 consensus. First of all, 114. Aces in the house. 114K. That's not. You don't see this kind of number. That's not a normal number, like in any situation. And I think this is where like, oh, recession. And then what happened? They revise all the other reports. So like, to me, these guys' credibility is like shot, right? But the market's not there yet, right? The market hasn't really gotten to that point. But I would not be surprised if they come back again and say, oh, guys, I'm sorry, we made another mistake. It wasn't 114, it was 154 or something stupid, right? I mean, like stupid. So like this is where we get really, really funky, like really funky. So essentially what happened, though, is you look at this non-farm payroll number coming in 114, huge revisions prior, and the market has to say, stop, wait, pause. Everything that we thought was true is now not true. We have to go back in time. And what did we do? We absolutely went back in time. We went back in time all the way to like February, March, nearly March. And we basically tested, I believe I'm looking at another screen over here, pretty dang close to the 200-day simple moving average. You know, that's kind of like part of the thing. You lose the 50-day. No, we're not there yet. You lose the 50-day, and the odds of going to a 200-day, this is on a daily simple moving average, is very high. I mean, it's very high. And so we didn't actually get there quite yet. We did pull all of the price action back from that low volume rally in March. So since March, we had that low volume rally. We've reversed all of that now. And so now I think it's like, okay, all right, what happens now? Right. So what happens now? I think that's TBD. The problem is that we have September freaking around the corner, and that's universally bloody, right, for the whole market. So while, yeah, we can probably bounce, I just don't know that it's over. And I think I have this weird feeling it might be like a slow grind from here. So we'll have to see, right? And I think a lot of that comes down to this. I don't think we're going into a recession. Quite frankly, I think that we've been in a bit of a recession. The market finally just realized it and said, "Oh shit, we were wrong. Let's pull her back." We pulled her back, and by the time the market gets there, we're going to be coming out of it, right? So, like, which is right about now or next month or so. Honestly, that's my rant, right? So that's where I'm at, right? Unemployment of the non-farm unemployment. Estimated 4.1%, coming in hot 4.3. I don't know, man. That's why even last month when we got the unemployment at 4.1 prior versus prior at 170K, you don't really get these like increasing non-farm payroll numbers and increasing unemployment rate. It doesn't really happen like that. So it was all sus. Now it comes out in the wash. And I feel like this is overdone. I feel like we get the bounce, but my concern, and this is it, my concern is we bounce too far, too fast, and we pull it back even further. That's my concern. There you have it. So that said, where does it kind of leave me, right? So we got to look forward a little bit this week. So the good thing this week is that we don't have a ton on deck in terms of economic data points. The biggest stuff that we have, to me, is going to be the bond auctions. So we got a 10-year note on Wednesday. Tomorrow we do get a 3-year note. We get this thing called household debt for Q2. That's going to be interesting, right? If there is this recession situation, well, you know, that's the thing, right? Like if there's really recession, I mean, debt's going to be through the roof, right? Charge-offs and things are going to be like absolutely horrendous. It's not going to be good for that kind of stuff. So, I mean, we'll see. We'll see. How's JP Morgan doing? See, like JP Morgan is not recovering like the rest. I know you guys know I've been short JP Morgan. It's not, I mean, this is not a bounce. So I don't know. There's not a love for JP Morgan. I have this really weird feeling that Jamie's going to be retiring really soon. Like really weird feeling. So I guess there's that. We'll see. JP Morgan, oddly no recovery. Intel, sub 20 this morning. If you have bought Intel anytime in the last decade, congratulations, you're red. Still, it's bad. It's bad, guys. It's bad. But, I don't want to be a fear mongrel here. I think, I do think this is overdone, but and this is the concern. Can it continue to be, he has been selling, right? I don't know if has Jamie been selling? I don't know. Someone can look that up. Evan can look that up if he's around. This is right here, right there. I mean, prognostication, whatever. Jamie will be secretary, treasury. That would be amazing. But talk about a short on JP Morgan. That would be the short. But they did warn about a bunch of stuff. They didn't do any forecasts on their share buybacks because of the last stress test. They actually said that the government got it wrong, and they said, I tried to pull it, and I feel like they retracted the statement, but they basically said, no, you guys think that we're great. We know that we're going to be fine, but the losses that you guys estimated on this last stress test were way low. It's that wild. They said that. So anyways, 2022, Joe Byron changed the definition of recession. Oh God, I don't know that. That's hilarious. I was going to say, so David, what is the definition of recession now? That's hilarious. And that's what I was thinking. I'm like, I look around, like I live in San Jose, so it's a little bit different, but I look around, I'm like, what are you talking about recession? I'm still paying like $6-7 a gallon for gas, right? Like I still spend $30 for fast food because I'm fat and lazy sometimes. But anyways, people still buy stuff, maybe not as much. I don't see the minimalist thing happening. Like if you see like a surge of like minimalism is like a thing, then okay, maybe recession, sure. But I don't see that, man. I just don't see it yet. So anyways, I can go on. So Wednesday we get the 10-year. I think this is probably going to be one of the probably the biggest bond auction of the year. I don't know. We'd have to ask Kevin about the actual stats here, but like in terms of how important this bond auction is to the market, whether or not the size is large, I don't know. But to me, Wednesday is the pivot day. Wednesday is the pivot day with the 10-year note and the bond auction. Side note, 10-year note auction and the 30-year mortgage. Side note, if you're looking at home sales, okay, this is really weird. Home sales actually went up a little bit. And I think here's still the argument for small caps is that as rates go down, a lot of the lenders, people like that will be able to refinance some of these loans. There's not a lot of them, but like some of the loans that were really bad or whatever, they're gonna get to refinance that. So SoFi might be a beneficiary. That thing like boom right off the bottom. Let me see SoFi. Yeah, look at that. SoFi no longer red. Insane. Nvidia is still very much red. CrowdStrike green. JP Morgan still red. Man, oh man. But yeah, so that's why IWM, I don't know. I don't know. It looks decent, but look, the big bounce. I think that the road, like, if you want to go somewhere, I think you still stick with value and you stick with areas in the market where you feel that you have a very strong fundamental case that the market's not necessarily pricing in, right? Yeah, Carl's bad. Love it, maybe. You know, so if you can get, I think Hood being the first buy this morning. Look, no way. Okay, coming back a little bit. Open up almost $14. That's crazy. Do I remember 2 negative quarters of GDP? Absolutely. That were, by the way, revised to eventually land green. Yeah. Oh, that's right. That's right. That's what. Do you remember? That's okay. 2 negative quarters GDP is recession. Okay, that's what he's talking about, David. So if, let's say this, hello, if this is the definition of a recession, guys, we already had that happen. Do you not realize we already had that happen? And they said, no, we were wrong. What I'm saying is like, oh no, it actually was that. Then you were wrong. Now, by the time you figured out you were wrong, then we're going to go overshoot this to the downside, which maybe we have. And by the time that's all hashed out, oh, we're going to be out, right? It's going to be done out of it. We can't see. What can you not see? I don't know. I can see you, Daniel. But anyways, I'm not looking at the charts. I've just got this slide up here. You know, that's where we're at. So the 10-year note, 30-year mortgage, and then we get jobless claims and we get a 30-year bond. So still, here's the thing, still looming is the 210 yield curve. That's uninverted, I think, as of today. We can take a look at that. I'll pull this charts over. And how do I do this? So I do this by load layout. Where is my yield curve? I have one. Yield spread. And it's just like all the bonds. So 2-year yield sitting at 3.9. Yep. Uninverted. So when the 2-year is lower than the 10-year, the 10-year is at 3.82. 3.82, 3.92. We're back into the inversion. It was uninverted for just a little bit. Fed funds mostly control this 2-year. They don't really control the 10-year. This is the market. TLT is like 20, 30 year, by the way. I mean, yeah. So as the 2 and the 10 are kind of like flip-floppity back and forth right now, I feel like that's going to be what creates this chop, right? Because the 210 is just definitively, it's going to be on everybody's radar. They're going to be like, oh, it's uninverting. It's all bad. And it is technically not a good signal. Look at this. Big bounce, guys. I don't know. What the best case scenario is this day to stop right here and go nowhere. Probably for the whole week. As much as I hate to say it, that's like the best case scenario. But we'll see. We will see. So other than that, I did have some seasonal stuff. This is technically where we are on the presidential cycle from seasonality perspective. And I said last week, look, there's a time to use this and a time not to. And I think we kind of throw it away. This is September, August. September is technically like over here. I think this is, let's say, call it out of the window. Here's basically a zoom in on that election year itself. So this is from Fraggle, by the way. This is that July to August kind of dip. Sometimes we get this rip through August, September. Sometimes we get this rip. So I want to be aware of that, but I don't want it to come too hot, right? The thing about this is that if we started in January, that means that we would actually have to pull back the entire year's gain. And so it's not like we're flat on the year. Right now, we still have a bit to go. So there's that. What I wanted to do from here is kind of like this is, so I pull these data points here from the CBOE Fed Watch tool. And this is where you find out what the market is pricing in terms of actual rate cuts. And when I do this compare, so it compares. We're at 5.5. Pricing in like a 25 basis point cut. That's... Here, let me just do it this way. Here's the actual screen. So this, can you guys see this? Let's see if I can zoom this in a little bit more. A little bit better. Somewhat better. So this last week we had an 88% chance of a 25 basis point hike, right? A week ago. And then NFP came out, we had 26% probability. Now we have an 18.5% probability of a 25 basis point cut for September. This is September. And then a week ago, we were at 11% probability at a 50 basis point cut. Now it's then 75, 81%. 81% from 50 basis point cut. I don't know. So I have to see. That's what that's saying. That's what the market's currently pricing in. So the question is this right, wrong, or indifferent, right? And I think that will start to drive where the market goes. If I want to see what the full year is, I actually have to go over to January. And this is, again, we're here. So by the end of the year, they're pricing in 40% probability of 150 basis points. What? To do that in three meetings, that's 350 basis point cuts in a row. Boom, boom, boom. That the market's pricing in right now. Or a 75, 50, 25, something like that. Maybe it's a 25, 75, 50. I don't know. But there's no meeting for August. So either we get a 25 basis point emergency cut at the end of the month, something like that. And then September comes and we get a 50 and then another 50 and then a 25. That could get us to 100 basis points of cuts. But man, we'll see. What I think is like the closer that this gets to actually cutting, like pricing in that full thing, I would like to see the market overshoot this to the ups, like to pricing in too many cuts, which it might be there. It really might be there right now. And if that happens, well, then that's probably the buy to me, because they've overshot the cuts regardless of what actually happens. So, well, I got Miss Cleo. She's here. Let's get to a couple of things too. Yeah, David. And so this whole thing, I think this is my whole thesis is like, look, guys, we already had the recession. You forgot about it. It happened. Now we've been sitting in it this whole time, except the market ran up, and now we just got to pull that back. And by the time you figure that out, we'll be well on our way. Which might take us to September, man. It might. Who knows? But so for now, we have earnings on deck, and that's kind of where the focus really, I think, should be, because the market's going to be a complete shot fest. It's going to be a shit show. That's what's true. So, Palantir tonight. Can Palantir save the market or the small caps? I mean, dude, that thing was $20 this morning, $22 or something this morning. I had to buy a little bit of that too. $20.70 because I sold it. I sold my Palantir way too early. I sold it, I think around here, so I could buy it back. I didn't buy a whole lot, but I was kind of missing it. So I bought a little bit. I told you guys I bought the hood. I don't know how Robinhood isn't cleaning house right now, like right this second, on all this crazy trading that's going on. I don't know, right? Rivian, I got a bag. That was a huge recovery off the bottom. I'm not selling. I didn't buy either. I'm still up 50%. So what am I going to do? What else is here? I think those are my biggest watches. CVS probably going to be is not good. I think Datadog, we'll see. I think so. As we move forward, we get into some of these smaller cap companies. Super Micro tomorrow after the close is going to be important for NVIDIA. I have zero confidence in Super Micro's senior management to deliver like a well-rounded message or a polished message. So if you get a dip to buy, I don't know. I feel like is Nicola going to save IWM? Oh God. Jerome Powell says, oh man. I feel like if anybody can mess up a good earnings, what should be a good earnings, it might be Supermicro. It's just me. Celsius is going to be interesting tomorrow morning. They are down in the duper for sure. I had low end Celsius like 35. we were like $40 this morning. Pretty damn close enough for government work. Yeah, it's just barely sub 40. Brutal. But this is what I'm talking about. So we bounced, we filled a lot of these gaps, and now it's starting to come back down. I'm like, guys, I don't know. Airbnb should be interesting. Do you guys use Airbnb still? It's all the way back to Airbnb is SMC at a 400. I had 500. Is it 500 right now? I don't even know. Airbnb is kind of an interesting one. This is just the chart. So like if I take this off, Airbnb is at this 120 level. Look, it usually bounces right around here. That's more interesting to me, actually. We'll see. That is an interesting chart. What else do we got? Oh, Disney Wednesday. I don't know that Disney goes anywhere. But she might. She's been moving on earnings. She doesn't usually move on earnings, but she has definitely been moving on earnings. Wild. And some of the energy companies. I don't cover Reddit really. I mean, maybe if Reddit says, "Hey, we're launching an LLM," not even then. Like, that's what they would have to do though. That would cost them too much money. And then we get into some of these, the weed companies, CleanSpark, Bitcoin miner, Array, is like a solar company. But yeah, the weed companies might be interesting. So who was it that beat? I think it was Tilray, wasn't it? Tilray beat heavily recently. That could be. So we have Aurora, Kronos, Canopy, and I think Tilray already reported and beat. Yeah, maybe. That's what I'm saying. I think, Airbnb at 120, it's kind of interesting. I have not ever owned Airbnb, but at 120, that's a spot that you would probably want to take a shot at, for sure. Shopify. I think Shopify could be a tell for a lot of the small cap software companies. I think it might move some other companies for sure. Actually, I think it might move a lot of companies. If you want to hide out, again, it's value. Realty Income, ticker O, letter O. Even Cheniere's had their own thing. I don't know. Didn't HubSpot get bought? Oh no, Google said no, we're not buying you. AXON, that's actually probably like one of the best performing stocks out there. Axon Enterprises. What are they doing today? Oh yeah, nice little pullback. But a good company nonetheless. We'll see. Yeah, these are small companies going out here. Global Payments, no. Sarepta, Digital Turbine, no, that's short. AppLovin, no, short. Magnite, no, short. So much. Elf is going to be interesting. That'll tell us, what's the consumer really doing? Are we really in a recession or what? I think Elf is going to be the tell. What do you guys think? Look, you're not buying makeup if it's really a recession, right? I don't know. Maybe I'm wrong. I don't wear makeup. What do I know? Anyways, guys, it's time. Are you ready? Let's do this. I got Cleo behind me. Let's get to it. All right, she does it again. By the way, look at this theme card. I don't know how she does this. This is this week's theme card. This is insane. Let me see if I can pull up last week. I mean, she's been on a roll. Then this is funny, right? Like she's been on a roll. I'm trying to pull up the old ones. She's been on a roll. Yeah, last week was weak. She's a downtrend. It's not good. That's not a good theme card. Is that the Eight of Swords? That's a really ugly theme card. Holy moly. Anyways, I don't think if looks could kill, That's the theme card for the week. Ah, all right. Okay. So we know some of oh shit. We know some of these. So Knight of Wands. All right. Ace of Wands tomorrow. That's what's important. Page of Cups, 10 of Wands, and an 8 of Cups. Let's see what the hell all this means. All right. So today, so the theme card for the week, here we go. This is what Cleo says. Theme card for the week is the 8 of Swords. This isn't a great no shit card. Although, by the way, I get this on Sunday. So, like, dude, how did they know? This isn't a great card to see if you're the type that hopes for a bull squeeze this week. This card says feeling trapped and paralyzed with no way out. All right. I can get with that. Can't trust our senses because they are blocked. The only hope we have is to use our feet to walk away from the danger. But I thought they were tied up. I think that person was tied up. Will we? I think best chance chop around to finish flat for the. I mean, dude, if we finish flat for the week, that would be crazy. Worst chance to end up deep in the red. Good job. So best case, Cleo says flat. Worst case, deep red. It's not a week for the Bulls. That's what it's saying. Okay. Normally have me thinking the beginning of the week has more positive than the end, but Thursday, Friday cards aren't great. Ooh, so we'll have to see what the rest of the daily cards say. So Monday, that's today. Monday, 8 of Wands, which led to last Monday was 8 of Wands, led to impulsive swings oriented lower. Today's card could bring more of the same, only with a little more energy. No shit. Something interesting to note is that this card usually acts like the opposite of the cards before and after. Friday was pretty bad, so maybe nope. Unfortunately, I don't think there's a high chance of that, as this card relatively is rarely positive. So I estimate that we'll be selling rallies here, even if we do rally Tuesday. Wow. Cleo coming in hot. Tuesday will wipe it all away. Oh, Cleo says, do not buy this dip. All right. Ace of Wands Tuesday. Typically, I always suggest Ace brings new starts, but on the heels of another Royal, I think Ace simply finishes off Monday's work. Oh, God. I think the Ace simply finished. Okay, this also works against our Monday as a mean reversion possibility. So maybe, okay. So Black Monday. If you don't know, Black Monday, what is it, 1987 something, was an open, deep red, deep red, little bounce like we're seeing right now, and then an open red Tuesday to finish it off. And that, my friends, I believe was a low. You guys can correct me on that. But I believe that Tuesday was the low. So I'm not trying to press my shorts here. I think the vast majority has been done. Best case for me is that we chop it out. But that's I believe how that went down. So probably on X, everybody's kind of like researching what happened Black Monday. I'm pretty sure that's actually what it was. This card also brings wild swings, but usually does not trend, meaning we could spend most of the day buying dips and selling rallies, closing within 0.5% of the. Cleo with the gross, like 0.5% of the open. We can see both from the meaning of the ace, starter or finisher, and the next day's card that this is probably finishes the move and maybe sets up a pivot. This could fit the theme card, trying it to gain strength mid-session. All right. I'm with this, right? Page of Cups Wednesday. Okay, I think we're starting to get somewhere. Page brings new starts. This one usually moves as a result of news or an economic event. What did we have on Wednesday? Wednesday was, I think I said the 10-year. Yeah. Wednesday was the 10-year, and we get consumer. What else we get? We get consumer credit change. Oh, I don't know how consumer credit change can be good. Oh, God. Although data this morning was not bad. That's actually why we got a bit of a bounce. Or no, was it? No, it was not good. What am I talking about? Monday is the 5th. Is today the 5th? Yeah, no. We got services PMI. Oh, no. Services PMI came in good. Look, so this is a little bit divergent. So consensus 51, prior 48. We came in at services PMI 51.4. That's better Woo, woo, better than consensus. So that's not bad, right? All right. So 10-year, we'll see how this goes down. Man, this is rough. This guy historically positive, which fits the model we've been hypothesized going into today. We had the ace possibly finishing a move, and the theme suggests a midweek change in energy. If we're going to rally today, might be the best chance. I can get with that. Events. Do we have who else is reporting that day? Is there anybody major reporting on Wednesday? Let's pull it up again. Wednesday, Shopify. It would be Shopify. Can Disney's reporting Wednesday morning. Maybe Disney saves us. Or okay. For the Wednesday rally, this is real. Supermicro reports Tuesday after the close. Maybe that lifts the NVIDIA boat. That would fit that for sure. So then Thursday, 10 of wands, crypto gets card earlier than this. So 10 of wands is just a final push, one more fight before the war is not over. The worst is behind us, and now we just need to survive one more day. Okay, so looking for higher low, Thursday. My thought is that if Monday and Tuesday offer similar sentiments, then Thursday will serve as the finisher for that move. Finish him. The finisher. If somehow the page brought a huge rally, then this 10 serves to end it. Oh, if somehow, no. Okay, Monday, Tuesday did not. Okay, did not. I don't think so. That's what I'm saying. If Monday, Tuesday are too, if it's too much, then that's all bad. Bull should hope that Monday, Tuesday connection works, because that could bring an end to the suffering. Otherwise, we're just bear flagging. We're just bear flagging to set up another red candle. Sure. I didn't know you're such a technician, Mr. Cleo. Friday, 8 of Cups. This card says that it's time to focus on happiness. Oh God, happiness over wealth, and take a new path that allows us to do that. Okay, so that's a big pivot day. Usually means we're giving up hope and need to try something new. Oh God, we had this card last Thursday and it led to a very negative day. It's not unreasonable to expect the same thing here. Oof. However, if the 10 was negative and indicated that the selling is almost done, then this could transition us back to the opposite. So my thought is that if Thursday is bullish, we're selling. If Thursday was bearish, then we have a chance to be green, which is more closely aligned to this card's historical action. I do think we can expect a decent change in energy here. I'll try to draw next week's card earlier than normal and see what that looks like. So net, the recap from Cleo says, yep, it's a tricky week, feeling trapped, impulsive ones, emotional cups. This is like, you guys got to be really, the market has started to sell now. You got to be emotionally stable to trade this stuff. You cannot be emotional in this situation. If you're not sure where you are on that, you can play with paper trading, not real money. Please. If we show weakness early, then we have a chance to rebound midweek. We will probably see most of the move Monday, Tuesday. Yeah. I mean, so that's that. That's where we are, boys and girls. So let's just do this. Let's go ahead and get into it. Into the indices. This is, this 30-minute candle, guys, is not a pretty one. But, here's where we are. So I think, average weekly ranges, we are blowing through those right now. And I think we're just in expansion mode. When you look at things like this, what I do is I set up my gaps, right? So we know that we have session gaps way above, definitively. We don't really have a whole lot of session gaps to fill below, but we're creating them overhead. Just because they're created doesn't mean that they're going to fill. What I just drew was a fib, right? So a fib retracement. Let me take all of these where my NFP levels off. I have a lot of these that I haven't grouped yet. So I'm taking all these NFP levels off for just a minute. And what I want you to do is, so this shaded area is pre-market. If you can see that, it's barely there. So from the gap down to the pre-market lows, 50% of that is 519.16. This is where we want to hold above for the close right here. Does that make sense? That's kind of where you want to hold above. So from here to here, this is your bounce up to that 6.5, 6.18 kind of retracement. By the end of the day, ideally you want to be landing in here to think that there's some kind of like, we're going to continue. Otherwise, below there, we're probably going to continue in the direction of the gap, quite frankly, which is down. This is a huge gap. So even now, like this could chop. We want to be careful by the end of the day that we don't see a big foobar flusher. I don't think it's going to happen right now. I just don't. But when we have these large gap days, the second move tends to be at the close, right? Like very much toward the close. People that were like hammering long at the open, they're going to be like, oh, wait a second. I don't know that it's over, and they're going to sell at the close. And you'll see that happen like in the last 20 minutes or something like that. So you got to be really cautious of that kind of stuff. Here are the cues. Super similar. Sorry for all these NFP levels, but I got to have them there. They're important. Super similar. Here's the gap. This is a little bit better here. The half gap is 433, so we're a bit more extended. Almost closed that full gap on the Qs, so it's a bigger bounce than the rest. But again, it's not over yet, guys. The only time that my system says to reverse a gap down like this is if you're filling the gap and you're extending above. Like my system says to stay short. I'm just saying, look, I know that was a big move, so I got to cover the shorts for sure. For me, it's like, well, okay, do I want to press a short? I don't know. This is pretty wild. But you know what's good is that here's the cues. We do have a lot of NFP levels down here that should serve as like decent support in this area, literally right here. But if we lose 422, guys, on the Qs, this is what I'm saying. If we lose 422, there's a huge gap. Like there's a big, nasty gap on the Qs all the way down to 400. And with this kind of momentum, this is how these NFP levels work. If you don't know, you will move from level to level very fast. So if there is a day that we open below 422 spot 78, and mark this down. If there's a day that on the Qs we open below 422 spot 78, it's going to be a bloody mess. Just what it is. And we're going to close that day or the next day within 24 hours of trading at 400 or lower. That's what's going to happen. And we're right there, right? So it's not like cover the short, like it's cover the shorts, man. It's cover the shorts. Like if you call the top here, great. We kind of did. But we're way down here. And the 200-day simple moving average, like you're going to, that's what's going to happen, right? That red line right here, that is the 200-day that we're going to come in, probably retest. But I'm telling you right now, if we open up on the Qs below 422 spot 78, it's going to be a freaking massacre. So like if you're struggling with technical analysis, the way this works is like you're trying to be like, where's support? Look, support's broken. It becomes a short down to the next level. You just always have to have your levels available, right? Right now, we're in a lot of chop zone. So the best case scenario is that we chop in this kind of like box right here for the whole week and build a net new base. That's the best case scenario. Do I think that's going to happen? I don't. I just don't, man. I mean, this is weird. Like, I just have to, like, I want to see this 200-day simple moving average like hold, and that's going to be around 430. But usually the first test is like you get a bounce. We'll probably bounce here. We'll probably get up here, and then we'll probably come back again for another shot at it. It might not be this week. It might not be this week. So that's why I'm like, okay, just patience. You can dip by a little bit, but look, here's the thing. For a long-term investor, what's the difference? 430 to 400. 420 to 400, it's like 5%. Okay, right? Long term, I could care less, right? If you think this thing's going to be 800 in the next 2-3 years, what do you care, right? You shouldn't. That's how you should be thinking. But that's from an investing perspective. Trading, whole different deal. Spoos losing the 50-day for the half gap. And this is, so where's the 200? We got room on the 200 from a SPY perspective. Let me pull up these NFP levels again. Yeah, so it's super similar on SPY. So the pre-market lows, we got 2 NFP levels here. That when you get 2 overlapping like this, that's good. Like it's a better level, right around 510, 511. So it's 512, 50 to 511. That's a good line of defense. But look, the 200 here is like, if you get, it's the same thing on SPY. If you get an open below 510, guys, it's going to be a bloodbath. It's going to be a bloodbath. If you get an open below 510, no good, right? You're going to see 495 probably that day, right? It sounds crazy, maybe in the next session or two, but if you're in your shopping list, this is how this works. You see this level on SPY hit, then you go out to your shopping list and say, okay, here are my items that I wanted to buy. SPY is at this level, Qs are at the levels that I have that paper said I should look at. Now, of my shopping list, who's on the biggest sale? Then that's what you buy. That's what you should do. Not financial advice, I guess. But anyways, that's kind of where we are. IWM, again, interesting. This purple line is a 200 week simple moving average. It's sitting right on top of the 200-day simple moving average. We talked to our friend Logical the other day when we were looking at this. I'm like, look, if I know IWM, this thing is going to lose 200 and it's probably going to go to 195. And I think this was close enough. But 195 would be that next level lower for the liquidity grab on IWM. But so for me, for IWM, this whole thesis kind of gets pushed out a bit. I think we get pushed out to like Q4, which it was always definitively a Q4 thing. But to me, it's like, okay, we got to get pushed out a little bit for sure. So this could chop quite a bit. We shall see. All right. Okay. You guys want to see? If you got tickers, we'll take a look at them. I'm going to scroll up here in the chat just a little bit to see what you guys got. Nicola, SMCI. So Live on Edge is asking for SMCI. Let's take a look because they do report here coming in hot. I'm not going to do a whole lot. Oh, yeah, dude. So I had 500. We're basically there. This is what I'm saying. It's like we're really at this point, like you're filling gaps. It's all the same, right? So you fill a gap. It's like target acquired to the upside if you get it right there. 550. I don't know that I would. I'm not going to trade SMCI. Let me see what is. Let's see what they usually. What do they usually move? It's going to be a lot. 14% last quarter. A couple 20+%. 35, 23, 28. Good God, this is a crazy mover. So call it a 20% move. Yeah, no, I don't think 400 is going to save you. I don't think 400 becomes a thing because if you lose where you are right now in SMCI, you go to 350, 360. So SMCI would be 350, call it 360, and you fill this in. So it'll actually be a good 10% below. and you retrace this whole shenanigans. Otherwise, best case scenario, you go up and you go back into that 800 spot, and about a 20% mover. Yeah, that's about accurate. Crazy. In either case, it's about a 20% mover. So either she goes back to like near 800 and maybe even 7 to retest the top of this downtrend. Like that would be sketchy, but that would make a lot of sense to see this go like this. And then it would be probably a short later, unless you see like this pop up through, hold, and then it's a long. But I would forgo this entire move here, just because the probability of a downside is very real, down to sub 400 on SMCI. I use Airbnb. Okay, so that's SMCI. I think Bitcoin is definitely worth noting. So by the way, if you didn't know, our group, we've been saying short Bitcoin this whole time. Like, well, not here. Like, you can buy this, but we're not calling for a breakout. And in our group, not the whole time. So we called the bounce, and then in our group privately, I don't think it's a huge trade, but I thought we were going sub 60 this weekend. I didn't see sub 50. Like sub 50, I didn't see. But this green box actually was already here. So this is the buy zone, guys. It's a buy zone for a bounce. But this buy zone goes deep. Let's just say that. Here's that prior downtrend broken. This is a proper retest of that downtrend. Here's the thing. I would caution strongly. When you get stuff like this, what could happen is that you could see your underlying just kind of like hug this downtrend, right? And that's kind of what Qs are doing right now. And it doesn't happen until you get to that like ultimate like little blip down there. So I think, patterns and what have you aside, that was a good flush. You got to that 50 level in here, sub 50. This is buy zone, but it goes down to 44, right? So I think this is that level here. If you really lose this, and we're out of it right now, and I'm going to zoom in, just let me pull up the daily real quick. Maybe you can see it. So there's this little volume shelf right here that is holding you up right around 50K. If you lose the 50K, you definitely go to this 43. So inside this box, I think is where you nibble, but you nibble smaller here, heavier here. That's what I think is true. And this will complete what we all know, right? Is the Bart Simpson pattern. And we don't expect giant bounces right away, right? The Bart Simpson crypto pattern is near full now. We expect this, and then we go. Q what? 4. So do you need to rush out and buy it? No. Same thing with Ethereum. But this is, look, we kind of saw this coming. Typical Bart Simpson. Here it is. Does anybody have a Bart Simpson meme? But look, if you didn't know, like, this is. Oh no, he's not there, but he's there. I need that. We'll have to do that later. But yeah, typical, super typical crypto. If you didn't know, well, now you do. Then we look for it to be inverse. I know, right? So wild. But these are your deep buys. I think, in crypto land, you got to do it this way. You got to just kind of like throw that limit order out, because it's going to happen in the middle of the night on Tuesday when you're asleep, sound asleep. All right. NVIDIA. So 95, everybody was looking for this gap to fill right here. And so I think like we definitely have right in here. Do I think that this holds? I don't know. It's possible, but like from here down to 80, look, we got to 90 this morning. I mean, that's wild. 90 this morning. So first test of this shelf, we're in. We're in. When I was talking about the 200-day, that's $80 on NVIDIA. That's right in here. Here's that last kind of like area of right here. So we move this over. I got my hand on my face though. It's all of this. I don't know that we can really say, oh, NVIDIA. So they have they're pushing out their chips right now. But I think you have to look into this area. This is about like 78, $80, give or take. This needs to hold. I think that this holds this area. But from 81 down to 75, give or take, I would be a buyer. Actually, my last buy on NVIDIA was like 82. But I mean, I would be a buyer down in here if we got in here. But right now, we're going to battle with this volume shelf. I don't need more NVIDIA though. Not right now. Maybe. But yeah, to me, this looks like we're going to fill in here. And I think it comes down to this. What is this, April? Look, we were just here around April, guys. Is that filled? Yeah, $80 is what it is. But that's your next dip buy. I think that's a larger dip buy. And that would kind of complete like what every $100 stock trades like. They trade from 120 to $80 and then $80 to 120. It's kind of like this. It's just what happens. People asking, oh, NVIDIA gets a split. What do you expect? And I literally said, I expected to trade like every other $80 stock. And that's a $100 stock even. And this is how every $100 stock kind of tends to trade. So, yay. Short XBI. Okay, so Apple. I don't think is a long. I don't think it's a long. I think that this kind of setup probably pattern full. You're back to, oh, did we hit 195? Okay. See, this is what I'm talking about. This happened so fast, you guys. I had 195. That was my number. Man, you guys even tell me. Whatever. I had 195 and I had 185 from here. So I think I think it can go a little bit lower. So 195 to 190, I think in this area, if you get that next kind of like flusher, and we were on spaces too. After, like this was when Apple had just reported they're at 227, and I said this then. I'm like, look, I don't think it breaks out. I think you get to retest this 200 type level, and you get in, and you basically $200 support for 2024. Man, that's solid. That's really good. We were talking about $200 resistance for a long time, guys. We're talking about $200 support on Apple right now. So it's a new era. It's a new era. This is actually really good. But I think this $200 base becomes like, I think Apple chops around this level and creates a net new investor type base. And I would love to see Apple do this and consolidate somewhere around that 195, 190, maybe breach a couple times before really getting through to September, which is the next upgrade cycle. I think that's most like realistic. Look, the comps that Apple is going to have to do, like that Apple is comping against, are the easiest across the board for all the Mag 7, next to Tesla, which is like the second easiest. So I think Tesla and Apple still kind of go in the first, like this is where you want to shop. To me, right? We have catalysts for both coming in like the peak weakness seasons. So remember 1010 for Tesla, Robotaxi Day, still a thing, guys. Still a thing. I had 206 as like my max downside. Today's little like bloodbath was kind of like an anomaly. I think that yen carry trade coming to an end is like again, the accelerant that maybe kind of overdid a lot of this stuff, but the best thing for Apple to do here is to consolidate and create a net new base of investors that didn't own Apple because all the bears were out there saying it's a no growth company. Now they're seeing that how much freaking cash this money is printing, and understanding that the comps are really easy moving forward. Yeah, Warren Buffett sold half of it, but look, guys, I'm telling you, I just think if I'm Buffett and I run a fund and I'm thinking, okay, half of what I own is Apple, like, and I'm trying to get you to buy Berkshire, BRK, like, you're gonna look at what I own and be like, why would I buy BRK when I can just buy Apple since you own like 50% of BRK's Apple anyways? That doesn't make sense logically, right? So like that to me is an easy layup why he needs to sell. But other than that, and he can build this cash pile because obviously nothing else is more attractive right now than Apple. But he has this cash pile and people can be like, okay, well, we don't know what he's going to buy yet, but he's going to do something. So, okay, there's an incentive to own Berkshire. All right, cool. So anyways, that's my 2 cents on Apple. I think it builds a base. I think you start selling like 190 puts if you get closer. I think that would be ideal. Okay, Hood. Look, whatever it was this morning, that was just way, way too much to me. I'm like, holy moly. Breached the 200. Guys, we got earnings. If you don't think Hood's cleaning up right now, you're freaking high. So anyways, this was, sorry. We were all the way down here. This happened so fast. I'm like, whoa. Okay. The first thing, I actually bought 3 things. I bought Hood, I bought Dell, and I bought some Best Buy. True story. So this was a big old flush. We just filled this entire kind of like volume shelf here. I think Hood's going to have an amazing quarter. And I think the market knows that. That's why this one probably bounced the strongest right out of the gate. And is holding. Like, look at this. This is holding. So if you're going to go shopping right now, I feel like these are the type of things that you can go shopping for. Things that have catalysts on deck that were just way overdone. That's what I like right now, right? If Hood was on your shopping list, SPY hit your level, you look at my shopping list, who's way on like super sale, fire sale, like Evan said this morning, Prime Day level discount, it was Robinhood all day. So that was like, boom. I know a lot of people got that out of the gate. Congrats, everybody. Congrats. I think that was a great buy. I don't know that we see that price in a long time. So I think that one's good, right? And then we have earnings coming, which hopefully we get back to that $20 level. I think Hood does. So to me, Hood does come back up over here and get to like retest this kind of like where they come from. And so as we get into earnings, I think this becomes the focus. So Celsius tomorrow, we'll see, right? Hood, Palantir, again, right off the bottom, things that have these catalysts, I think can hold this bounce. I haven't owned it for a long time. 200-day simple moving average, boom. I think you're good, right? This is a big level. So yeah, I bought Palantir this morning, guys. I haven't owned Palantir in a long time. So somebody DM, Amit, whatever, Paper Games bought Palantir this morning at $20, right? Like $21, right? I haven't owned this thing in a long time. I bought this way cheaper, like 16. I sold it right around here. I'm back in, baby. Let's go. But that's it, right? I think that's a beautiful retest. Let's go tarot cards. Yeah. Hymns. May wants hymns. This one's kind of interesting. I'm not like, again, catalyst on deck. This looks like a proper retest to me, but it's already moved so fast. Look, I think here's my caution. My caution on a lot of the small cap stuff is that I feel like we might have all gotten a little hyped up, maybe a little too hyped up on listening to the broader noise. Like, oh, IWM's going to go to 1 million, blah, 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 blah. That story could be real, right? But let's also be real just for a minute that these things should have already hit a lot of your targets, right? Like let's be real. You're calling hymns to new all-time highs when it's already at all-time highs. I mean, okay, I get it. Not that long ago, it was 12 bucks. It's a very, very volatile stock. So that said, let's take a look, right? So from here to here, you're right smack into this golden retracement, golden pocket, right? That goes down to 16 and you open, boom, right at 16 bucks, straight across the board, right? You have a pretty decent level. So it can pull back to 12 bucks. Let's all be very, very real. It can go back to 12.50. That's your next level to buy, right? But from here, you want to see it at least hold, and you just want to see it get back to the like high 20s, and then level out. So I think a lot of that stuff was priced in. Look, HIMS has some issues right now on the legal front in terms of like compounding GLP-1s and stuff. So that's going to be a headwind for a bit. I think you got to be a little bit like know what's going on too. That's going to hold it back from breaking out to me in serious stuff. BTC, BSB bully, short XPI. Dude, Fuddbucker is just going heavy on this XPI short. What is the XPI doing? So here's the thing with XPI, right? He's going hard. XPI. So if you're in the recession camp, then you should be short biotech. If you're in the recession camp, you should be short small caps, right? Because the availability of money is just not going to be there, right? And that's what's true, right? Here's the flaw in the IWM argument, which I'm pro IWM. I'm not short XPI. Fuddbucker is, but I'm not. These guys need easily available dollars, right? They need that. And if the 10 years like coming back down, if long bonds are coming back down, that's really good for biotech. But if there's also recession at the same time, money's just not going to be that available either. So you got to put that's got to be there like heavy grain of salt, right? So dip buys 90s XPI, it's not a lot. Like I don't know. You'd have to believe that rates are going to stay high or go higher or something maybe for biotech, but it could just be like there's no appetite for biotech right here right now. I think this is a longer play. I think this biotech piece could take a lot longer than people think, but it's put in a pretty nasty double top. A dip buy could be 86. Also from there down to 87, right there, 87, right at the bottom. Let's call it 88 for good measure, something like that. And then you retest this kind of last little level. Did we do Palantir? I think we did do Palantir. We did do CMG, Richard. So CMG, I'm long, man. CMG, this is a 30-minute chart. CMG's looking good. That's a recovery. If she fills this gap and holds, that's ideal. So CMG, way down there. The reason I like this level, it's like you have a pretty heavy retest here of this area. It was all in this area. Are we deep below? Nah, so we're going to come back over the 200. So it was this, here we go. So I had this level. Let me take some of these automated lines off. So I had this from this last earnings in February. I had this level and this little kind of like volume shelf in here, which more or less got filled. Big old buys. I just, you don't get a lot of heavy dip buys available on Chipotle. It's still down below like all significant now, below significant simple average. I'm not red on my calls somehow, but I do want to be somewhat cautious here. I'm not all bulled up. I don't want to get super bulled up. I did buy it recently, but I don't want to get super bulled up. So this was that downtrend there. I think you're trending. it's a big breakthrough, holding. As long as we're holding this, and I think this becomes, as long as we're holding this, then I'm good. Yeah. I'm happy that I would put a stop at like 51 for near term. Unless you have a long time horizon, then I think you just can buy this down deeper, like $10 maybe. But for right now, this looks like it has stopped going down at the moment. But this could change. This could flip on a dime. David looks snow. I don't really want to look snow. Snow is deep. Yeah, this is not a great recovery on snow. It's still 113. No love here. No love on snow. It's a short. It's not a long. No love on snow. Nit. Is that an all-time low? Guys, is there not a stream where I said 80? Is there not a stream where I said snow to 80? I don't know. It's $100 stock now. They do that 80 to 1. I don't know. I can't support it from a valuation perspective, but it's tough, man. 110 all-time low on Bucky. That is not fun. That is not fun. I think this one's important. So Fraser's asking for gold. So I'm gonna look at. I'll look at gold. Do you want? I think he means GLD. So this is gonna be an important to watch one. So I think this is the safety trade, right? If it's stagflation, there's only one trade. There's but one trade, and it is gold. I mean, it's possible that it's stagflation. Bit of a double top here. We're still retesting. We're still consolidating in a higher channel here. So this actually looks good. This has been a very choppy, trendless trade up in this zone. So I feel like the dip buys around the 17, like 217, have been solid. There's possibly one more dip around 215 area that you could get a stab at. That's right in here. But I don't think this trade goes anywhere, to be completely honest. I think this continues. This could be a long, drawn-out road. As things get weird, like if it's really bad, there's no trade that's gonna have legs here, and that's evident in this gold sell-off this morning too. Like if it was just a flight to straight safety, you would see gold rallying, right? What we see is like we saw some utilities. Yeah, so I think this utilities coming down here, healthcare coming down here. I think these things that I see, if I see healthcare, I see utilities, I see gold losing their gains, that tells me that we're actually healthy. Like people are taking profits in a lot of these safety areas. And ideally these tend to chop, but the breakout, like I don't think they're really breakouts, and we start to stabilize. So this looks actually pretty stable. RSP is probably not going to look good. No, net not looking good. But the thing, somebody tell me, where's the money going? It's not going into the dollar per se. Ooh, is it running into the dollar? Okay, so this is not what I want to see. I don't want to see the dollar running into the close, because if the dollar is so DXY is the dollar index. If the dollar is running into the close, that's where like people don't know where to put their money, and they're literally running to cash. That's what that is. So I think that's interesting. SPY August 16th. I actually had August 30th. I have 500 or 525, 500 puts. I don't know about the 16th. Is that a preview of crowd with snow? I'll give you guys crowd. So Not necessarily. So crowd at the 200 week, I think you could, like, we saw 200 coming. Um, this on crowd, this is your from the low to the high. So from this $100, $90 low to this most recent high, lining up to the 200 week simple moving average right here. This is what we call the golden pocket on crowd. So yes, if crowd were to bounce, lining up with the like a fib 656 golden pocket and a 200 week simple moving average, this is where it should bounce right here. I think you cover the shorts. And someone asked, where do you look for a crowd to like the net new short? You can be long a little bit, but you got to be ready to buy it at 170 and 130 also in case this is broken. And what you want to see is you have to see this reclaim 240 to get long again, like to get really long. Otherwise, you're going to look at this, which could be bad. Could be really bad. So I expect it to bounce. I do. And that's going to be right here, this 244 area right here. And possibly, so right here, I said 238. That's the low end of this. That's like right in here. 233s, something like this. So right in this area is your next resistance level, like this. So you don't want to see this. You do want to see this if you're bullish crowd. Hopefully that helps. That should help a lot. And if you do see it, then you should expect 170, and then you should expect like into that 150s. And then I would definitely be interested personally, but yeah, not heavily interested here. Cool. All right, guys, I'm going to call it there. I hope that was helpful. I'm going to take a quick break, and then I will hop in some spaces and see how the crew is doing. I'm curious to see what everybody's got going on. But yeah, I appreciate you guys. Trade safe out there. It's a wild one. VIX is through the roof. Man, this could get rocky. Best case scenario is we just kind of like chill. I would just like to see this chill. I would like to see the VIX back down to 20. 33. It's not bad. It's not bad. Yeah. We want to see this just like chill, guys. And if we get a red open tomorrow, I have a feeling that might be go look up Black Monday. See how that played out. That'd be really interesting for sure. So appreciate you guys. I'll see you on the next one. Adios.